Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a company valuation expert in St. Louis, Missouri. During this episode, we will discuss what happens in an IRS tax audit, tips on how to avoid an IRS audit, and what to do if you are audited, specifically pertaining to estate and gift tax valuations. We have the privilege to discuss these issues with a former IRS auditor, Mike Gregory. He's a mediator in Minneapolis, Minnesota, author of 11 plus books regarding various valuation topics, and creator of the collaboration effect. He's a frequent speaker at estate planning council events and uses mediation techniques to de-escalate situations. One final question that we have is if you have any summary comments or additional things you'd like to talk about regarding this presentation, your pocket guide, or how people can reach out, because you do a lot of speaking engagements and you talk about these issues to a lot of different folks. So if you can tell us more about those types of things that you can offer, or any additional comments about how to deal with people in the IRS.
Okay, thank you. Yes, in the past 8 years, I've given over 450 presentations in the US and Canada. And those presentations have been with various societies, associations, with companies, with appraisal organizations. And I've taken this element called the collaboration effect, and I've put together this little pocket guide. This is the pocket guide, the collaboration effect.
Gotcha.
If somebody sends me an email, I'll send that to an electronic form. This is a summary of the major points. And it starts off with what you've already heard about connecting relationships, listening actively, and educating judiciously. And as you open it up, the next page has, with connecting relationships, here are 6 things to think about. With listening actively, here are 7 things that you might want to think about as a question. And my favorite question that I like to ask is, what would you like to have happen? I might say it different ways, but what would you like to have happen? And then I follow up with, again, the tell me more is extremely important. So as you're listening to folks and understanding where they're coming from, and they develop trust with you, you really can work with them. And then inside here, I also have 10 steps to interest-based solutions. That's tied into 2 of my different books. I have key terms inside here. I also have understand positions versus interests and people versus problems. And the summary of this is be tough on the problem and be gentle on the people. Acknowledge your own emotions and theirs, and without blame. That's really important. Never blame. If someone's blaming, if they're blaming you, stay above the line. If you're ready to blame someone else on something, realize I got to catch myself. We don't want to blame ourselves for what I could have or would have or should have done. I call that BS. No BS, no BO. No blaming self and no blaming others. Avoid the 2 stinky twins.
Right.
BS and BO. And the last one is, you've heard the golden rule. You may even heard the platinum rule. The platinum rule is on here with treat others as they would like to be treated. But to do that, you need to know more about them and what's important to them and why that's important to them. So it takes a little bit better digging. If you're just going to do the golden rule, treat others as you want to be treated, you may not understand cultural differences. And I commented, the IRS, geographic differences, differences within industries, differences within the stovepipes, the different divisions. So keep an open mind, work with the IRS with connecting relationships, listening actively, educating judiciously, to build bridges, to negotiate closure. And in the end, isn't that what you want? You want to have closure. Get this behind you so you can go on to other things.
Yeah, and I think, one of the overall things that I think is really important in what you're saying, and having gone through, because I've been trained as a mediator as well, a lot of these techniques and a lot of just a thoughtful process. And realistically, it's just treating it different. IRS agents are probably very used to people coming for them and people being angry and irate, and you're making me do things that I don't necessarily want to do, and all of these types of things. I think that you can get a lot more done with some of the ways that you have talked about, and it is neuroscience. It is psychological negotiation, but it's also getting to a point that is beneficial for both parties. It's really not trying to trick somebody to get what you want. It's trying to get both parties to a place where we can both say, okay, this allows us to close this case, and I think we're all okay with it, you know. And sometimes maybe it's just supporting your position, supporting how you got there. Maybe putting more stuff in your report that is helpful. But I think that one page at the beginning for the valuation report really could stop a lot of this confrontation. So I think that's going to be really helpful.